Tesla earnings are always the most anticipated or among the most anticipated for every single earnings season, and that was this earnings season as well. Tesla numbers are out. The conference call is done now at this point in time. I've got a lot of important things to take you through in this one here today, okay? We're going to speak about the important numbers that everybody missed that I'm going to show you in this video here today. The second thing we're going to speak about is major comments Elon Musk made on the conference call, and I'm talking these are fundamentally changing comments in regards to Tesla's future here and what they're planning on doing. I mean, we're talking about changes in billions of dollars of capex here. And so this is major changes on several different fronts. And so we'll speak about that, what Elon Musk is talking about in that conference call. I got 16 different points to kind of take you through that I thought were very important talked about on that conference call. Then we'll speak about how me as a Tesla shareholder, right? I went into this with 1,700 shares in the public account plus shares in the Patreon portfolio. We'll talk about how I felt about this earnings overall. So we'll discuss all that as well. Google reported earnings after the bell just quickly here. Google, that was a grade A income statement. You expect nothing less than Google, right? Great earnings. Google stock's a buy. Valuation metrics. They obviously have the cloud business. They have Android. They have obviously Google search, right? They have Google AI now. And then they additionally have YouTube and they have some other products as well. But that's the core of their business. Google is looking really good, but we're going to focus on Tesla in this video. Just thought it would be weird if I didn't at least mention Google in this one here today, folks. Appreciate everybody joining me as always. New all-time high subscribers in the history of the channel. Appreciate each and every one of you. If you're looking to take your investing game up to the next level, you can apply to join my private stock group. That will be the pinned comment down there. Access all my best course curriculums as well as the 6- and 7-figure Discord chat and the Tesla chat. Let's get into this. By the way, if you're wondering why I'm talking a little quiet in this video, it's because my 2-year-old is sleeping in the room next to me, and I'm telling you, if he wakes up early from his nap, it's going to be WW3 in here, okay? It's going to be crazy. Alrighty, so Tesla in regards to the numbers, all right? We have a lot of rough numbers here and 2 really good numbers. So let's be crystal clear. Let me be crystal clear. This is a grade D income statement. This is a grade D income statement, no doubt about it. It's not good. With that being said, it's certainly not the worst I've ever seen. I've seen a lot of F grades in my time. This is not an F grade. This is a D grade income statement. Automotive revenues were down 7% year over year, which doesn't really come as a surprise, to be honest, from just about anybody out there. Every Tesla bull, we all obviously keep track of the delivery numbers, the production numbers. We all knew roughly what ASPs were going to be. So automotive revenues being down about 7% doesn't really come as a surprise to anybody. I think most people were kind of in the 5 to 8% range as far as that goes. Now, you want to be bullish about something? Look at energy generation storage revenue. And Elon Musk had some big comments around this business that I'll share with you in just a moment. Energy generation and storage revenue was up 100% year over year. The business doubled on a year over year basis. Also, services and other revenue. I keep talking about this business line. I've been talking about it for a year or two now. This is going to become huge. Not a lot of people pay attention to this business line right now, but I'm telling you, 3 years from now, 5 years from now, 10 years from now, everybody is going to be talking about the services, no different than everybody talks about Apple services nowadays. Apple services was like, everybody brushed off to the side for the longest time until really like the past, I would say 2 years, and now Apple services, everybody talks about it all the time, right? It gets more talk than iPhone even, right? And that business grew 21% on a year-over-year basis. Don't be surprised if next quarter you see even another bump up in numbers, because a lot of this was free trials for the new FSD, and I think you're going to get a lot of conversions to paying customers in the next quarter. So yeah, my expectation is that will increase in terms of the growth rate there. Total revenue is up 2%. Total gross profit up 1%. Obviously, for Tesla standards, those are pathetic numbers, which once again does not come as a surprise to any Tesla bull. We all knew this was going to be a horrible quarter in regards to revenues and gross profit, right? We don't expect that obviously to be the situation long term, but it is the situation we're going through right now. Operating expenses up 39%. So you don't want to see operating expenses up 39% when your revenue was up 2%. That's going to kill your profitability, right? And sure enough, it did. Income from operations was down 33% year over year, right? Operating margin was down 333 basis points, which is just a fancy way of saying 3.3%. Adjusted EBITDA was down 21%, 426 basis points, just a fancy way of saying 4.26 percentage points. Income attributable to shareholders on a GAAP basis, generally accepted accounting principles, down 45%, and on a non-GAAP basis, down 42%. EPS on a GAAP basis, down 46%, and then on a non-GAAP basis, down 43%. Trash numbers, it's what we expected. Just that energy business is booming, man, absolutely booming. Now, if we look here, we all know the problem in regards to Tesla, in regards to the last couple quarters. It was Model 3 and Model Y production, right? No doubt about it, that was down 16% year over year. And those are the two big volume vehicles. So although other model production was up 24%, and by the way, that's where you're going to see a lot of growth for Tesla. What's in that category? S, X, and Cybertruck. So remember, Cybertruck hasn't even gone into major production yet, right? The first 6 months of this year, which is what they've been reporting, right? That's all the ramp period for Cybertruck. We still have the big Cybertruck numbers coming in the back half of this year, and then certainly in 2025 and 2026 as they get cheaper models in the market. The big days of Cybertruck numbers are coming. They're coming, folks, okay? We haven't even seen that yet. Just wait on it. Total production now 14% for the company year over year. By the way, recent China numbers are looking very promising for the company now. Now, this was a number I was disappointed in personally. I was expecting better than this right here. Total end of quarter operating lease vehicle count was only up 2% year over year. I expected better than that. It looks to me like just a lot of people that might want to get a Tesla are just looking from the perspective of buying right now because of probably the tax credit, because of how much Elon and the team has decided to discount. And so I think that's why that number is kind of disappointing right now. Whenever Tesla goes back up on price and whenever, if ever, let's say tax incentives are taken away, then maybe at that point in time, we see leasing going up quite substantially. Global vehicle inventory days of supply was up 13% on a year-over-year basis. It was up to 18 days of supply versus 16 days of supply in the same quarter last year. Tesla locations up 20%, mobile service fleet up 7%. The fleet keeps growing bigger and bigger and bigger, right? We're going to need more mobile service folks. We're going to need more supercharging stations, supercharging connectors, and sure enough, supercharging stations 23%, supercharging connectors up 24%. And remember, very important here, right? Very important everybody remembers this because everybody gets so caught up in the short term, and the bears only talk about, the short term. If the bears will focus on the short term if it's convenient to kind of their narrative at that particular time, right? And so, listen, the supercharging revenue and opportunity is absolutely massive. Let's not forget that over the past 6 to 12 months, basically every single major OEM out there has signed up to basically utilize Tesla's supercharging network. And Tesla's supercharging connector and the whole network is going to be basically like a utility for all of electric vehicles for much of the world and certainly in North America, right? So this is something that I think, gets bypassed right now. But let's not forget, we're going EV over this next decade. We're going EV whether you like it or not. We're going there. And when you go there, who's going to be the utility? It's going to end up being Tesla, right? And so that's why you got to always view Tesla as much more than just an automaker. They're also a technology company. They're also going to be a robo-taxi company, right? Which is going to put them competitive with like a Uber and Lyft and those sorts of companies. You got to consider them as a utility because of the supercharging business, right? And then the energy business as well. You also should consider them in the AI game as well with self-driving, right? So don't ever view Tesla as just one thing because of a lot of things, just to be honest. And you don't get to this sort of market cap and this sort of success without being a lot of things. Now, this is very important. They show FSD version 12 as far as the amount of miles has skyrocketed here recently. And then also this shows you here Tesla AI training capacity ramp through the end of the year. H100, that's NVIDIA's very advanced chip there, right? They have a new one coming out, Blackwell. It's going to be even more advanced, but H100 equivalent GPUs and existing capacity for those have obviously gone up substantially, but they're planning out massive, more new planned capacity over the remainder of this year, which is very bullish for NVIDIA. Don't expect any let up in NVIDIA's numbers anytime soon because Tesla's ordering as many chips as they can get their hands on. They're going to be ordering a ton of chips next year, a very high probability. And then obviously you got the Metas and the Googles and all those guys ordering a ton of chips as well. So very, very bullish in regards to NVIDIA. Now, this is huge, okay? So look at non-automotive gross profit. I mean, it is flying. We're flying in regards to this one. The non-automotive side of the business is really showing strength right now. And understand the automotive side is in a bad place in the short term, which, by the way, very recently is starting to show some trends of stability and growing from here. But the non-automotive side of the business is really finally getting its time to shine. This business has been, the non-automotive side has been disrespected for years. Even somebody that's bullish on the stock and been bullish for a long time, right? I've even disrespected the business. I haven't talked about it nearly enough. If you can watch my videos talking about Tesla all the way back to 2018, 2019, I really only focused on automotive, right? The services opportunity and the energy business opportunity is massive. The non-automotive side of the business is crazy. And so it's great to see this business finally getting some respect, finally getting some limelight here, right? Incredible. Energy storage deployments is through the roof. Absolutely through the roof. And once again, I got some big comments from Elon Musk in regards to that business, right? Look at this. So this shows you over time the market share of battery electric vehicles, essentially, right? And it's absolutely incredible because China and the rest of the world, right, they were kind of in lockstep for much of 2020 and prior to that, right? But recently, China's just taken a massive advantage. And like I tell you guys, if you go to China and you want to buy a new vehicle, you buy an electric vehicle. If you go to buy a new vehicle and it's non-electric, people are looking at you like, what are you doing? That's where we're going in the United States. That's where Europe's going over the next 5 years, where eventually it's going to get to the point where if you're not buying an electric vehicle, if you're buying a vehicle that doesn't drive itself, people are going to look at you like, oh. And it's a new vehicle? Like used vehicles, people will understand. But a new vehicle? You're really going to do that? That's crazy, right? And so that's the route that's happening there. China's the leader, man. And they're beating us to the punch in regards to that, right? Now, Tesla had some pictures they wanted to show. Gigafactory Texas is a South Expansion data center. Man, looks beautiful. I gotta say, they do a good job. Corpus Christi Lithium Refinery, they're talking about starting production in 2025. There's a lot of great drone videos out there in regards to this. Is a very nice drone picture they took there. They show Cybertruck coatings shop. And then I thought this was interesting because if you guys don't know, Tesla's getting very aggressive in regards to the interest rates they're offering for their vehicles. 1.99% APR available for all Model Y trims in the US through August 31st. Now, that was one of those things you looked at, and a few years ago, let's say 3-4 years ago, it would have been like, no big deal, 1.99%. No one would have made a big deal about that. With interest rates where they're at, this is a huge deal. And so this just goes to the brutality, the absolute brutality of trying to compete with Tesla right now, where they've obviously dropped price significantly. You have the tax credits there, and you have the interest rates. I just don't think a lot of people are educated, unfortunately, about all this, and that gets into the advertising component of Tesla, which we'll get into in just a moment, because Elon Musk was asked directly about advertising, what they're up to there, and I'll tell you kind of what he was saying, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. All right.
A little bit of that today for our wounds from yesterday, but not entirely, because you think the S&P is probably going to be flat for August overall.
Yes, that's right.
And that's unlike some of your recent calls about the S&P with friendlier inflation data. You've made some calls about some big near-term moves. That's not what you're saying today, unless you're talking about small caps.
Yes, that's right. I think part of what we saw yesterday was, the rotation that's painful away from large caps. And I think Tesla earnings and Google sort of accelerated some of that. And I think there's been some uncertainty about the Fed's commitment to cutting, even though we expect inflation to fall like a rock. But when the Fed starts cutting, that's good for small caps. And there has been, I think, overseas, some unwind of that Japan carry trade that's hurt the NASDAQ. But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains. But now Russell 2000 has an 11 median PE, earnings growth 800 basis points faster. And, it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100% 1 month, 3 months, 6 months, 12 months later. 12-month average gained 40%.
You're very popular, and I would warn you this is not good that you're saying this. You think this rotation has been driven by expectations of a Trump White House? Is there another way you can say that? Can you come up with something else so you don't have to delve into the political side? You think Trump's going to win the White House, or you think the market at this point thinks he's going to win the White House?
Yes, it's the second. Betting markets are putting a 65% probability of a Trump White House. The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
Okay, so that's the linkage.
Odds need to change. I'm going to be honest with you guys. Because I felt like that a few weeks ago as well. 65, maybe 70, maybe even 75% chance, maybe even higher than that. I would say 50-50 now. Trust me, 50-50.
That you're seeing that. So you really think we've seen a Trump trade? And even after, the betting markets have moved somewhat. He's come down. Vice President Kamala Harris has moved up a little in the betting market since the weekend when the news came out. You still think that that's at play from here on, not just to explain the rotation that we've already seen? You think it's going to continue? That's
right. So I think it's from this point forward, there's a lot of opportunity in small caps. Part of it is that there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks. It probably boosts CEO confidence, which is M&A, and that benefits small caps. So there's a lot of overlap between a Fed cut imminent and a Trump White House. And that's why I think the interplay is positive for small caps.
Interesting. So
I still don't understand. You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility. And they're not expensive. 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think investors are taking some profits up. NASDAQ was up 20% and putting it into small caps.
We were talking earlier, though, just about the Mag 7 in particular and the spending on the cloud. If Alphabet's results are indicative of what we might hear from Microsoft and Amazon next week when it comes to the cloud, where they are spending a lot more than they're able to bring in at this point, is that a problem? Is that because it feels like there's a little bit of a sentiment shift too?
Yeah.
Even if it's a brief one and early on.
I agree. I think perception is really important for equity valuations, but the money spent by these companies on AI has a high expected return because they have moats that are getting stronger, and there aren't companies like this anywhere else in the world, so they're very scarce. So I don't think it's wasted capital, but if investors want free cash flow or if they see 11 PE stocks and small caps, that's what's becoming incrementally attractive.
So a flat S&P, but a Russell or a small cap gain of 15% in the month.
Yes,
possibly.
That's right. I think for the month of August, small caps can do something more than 15% even because they've underperformed so dramatically.
So basically 15% is his low number. Remember this. Everybody go on your phone right now or whatever you're watching this on and go into the notes tab and just say, put in Tom Lee says small caps are going to rise at least 15% in August, right? And let's just all remember that and let's come back to that. Because if he is, that's a genius call. but that's a big call to make, right? Especially when he's talking about 15% or more. So 15% is a low number there, right? That's an incredible call. Now, I have doubts about that. I have major doubts about that. Not that small caps could go up for August. I have major doubts about 15% plus, and here's why. If you look at the market historically, the market usually is not good in August, just generally speaking. Now, additionally, if you look at if you look at the last 4 election cycles, 3 of those 4 election cycles, the market downtrended significantly August, September, October, and then bottomed right before the election, okay? And I'm talking about 2008 that happened, 2012 that happened, 2016 that happened. It did not happen in 2020, but that was a very freakish year. Remember, we already had a stock market crash in February and March of 2020, right? So for the rest of the year, a lot of that was just coming back to life, right? The market reviving. That was a freak year. So I don't think 2020 is a very good year to look at and expect that to be the play out there, right? And so I think it's a potential the Russell could go up. I think it's a potential small caps could go up in August. Just to call a 15% or more is a little wild, given that it's August and given that we're in an election year, right? But I'll be a happy camper if that happens, because I can tell you, Honest, SoFi, those type of stocks, Fubo, they're going to be flying if that was to happen.
And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
Do you think that the earnings that we see for the big caps, will they continue to confirm your case that maybe could anyone blow their results out of the water and change this for big caps and say, wow, we're wrong, things are still okay, so that it doesn't? Because yesterday was 600, whatever it was, 600 plus points. That had a lot to do with earnings. Not completely. It seemed like it was ready to happen anyway. But do you think there'll be any surprises that are better than people thought in that group?
I think so. I mean, at the end of the day, I don't think these companies are not capable of positive surprise. A lot of good news was baked in. You know, the line in the sand ultimately will be NVIDIA when they report, which is really the last one to report. You know, I think over the next 10 years, the outlook is still really good for all these companies. So I don't think investors should lose faith, but profit taking kind of makes sense.
That's okay, great. I think we can continue to have you back on because you've been so good on the markets that even that other stuff, maybe.
If we go ahead and consider some of these techs, right? Meta, who we got coming here, NVIDIA, and then we can say Apple, right? Apple should be coming very soon. 3 big techs. So when you look at these stocks, Meta's looking really good into these earnings because valuation is very compelling, right? With that being said, though, Google had a very compelling valuation in their earnings, and obviously that stock has not done well post-earnings, right? So something to consider there, but we know Meta's spending a fortune. So I don't think that should come as a surprise to anybody, like when they come out with their spending numbers. And also, we already got Google's numbers, so it looks like advertising's fine right now. So Meta should be looking really good, and Meta has a lot of competitive advantages right now in regards to advertising market, new products that have been launched, and all types of things like that, right? NVIDIA is looking pretty compelling into their earnings because we know they pretty much beat and guide higher almost every quarter. Now, if they don't do that, then people might freak out, right? And then Apple valuation's a little rich, right? But there's a very high probability the company gets back to growth in 1 to 2 quarters from now, and then has a nice growth year in 2025 due to the bigger iPhone. Let's go Royal Caribbean.
In guidance today, our Seema Modi just spoke with the CEO, has more color on the quarter. Seema.
Well, Sarah, at a time that we're trying to understand the consumer, we spoke to CEO Jason Liberty. We're looking at the stock down, and he says the street has it wrong, the earnings report, and that reinstating the dividend for the first time since pre-COVID, that's a reflection of the strength that the company is seeing in the cruise market.
Wow.
I think somebody in my position would always say,
That's cool.
that we're worth a lot more money than what people are paying. I don't think we fully understand the reaction from the market because we handsomely beat the quarter. We raised the year. We raised the back half of the year. We reinstated the dividend, and our commentary around booking is exceptionally high.
Passenger cruise days were a bit light, and Liberty did mention that trends are starting to normalize.
What we are seeing across the board for 2024, we're seeing this as well for 2025. Really strong demand trends, and we're seeing not just strong demand in terms of volumes, but also people's willingness to pay more. And so I think when we're looking at the balance of this year, we're starting to see some normalization because, our comparables to 2019 for the back half of this year are over 25% yield increase versus 2019.
JP Morgan
So that's
still
good, but he talks about 25% over 2019. Okay, but guess what? Everything's about 30% more expensive versus 2019. So that's just something to keep in mind.
Is Royal Caribbean taking share from the broader travel market, noting our parent company Comcast earnings call earlier this week, where management listed cruises as one of the factors causing visitation rates at its theme parks to normalize. We're looking at shares of Royal down about 2%, but still up about 25% this year, Sarah.
So if we go ahead and pull up, let's go ahead and do Royal Caribbean. I'm trying to remember Royal Caribbean's ticker symbol. Royal Caribbean? There we go. RCL versus CCL, right? CCL. And then Norwegian Cruise Line is a public company as well, if I recall, right? Let's see. There we are. Norwegian Cruise Line. Let's compare these companies together. So Royal Caribbean, about a 14 forward P roughly. CCL is about a 17. Norwegian Cruise Line, about a 13. Then 2-year out forward P, 11, 10, 9. So next year EPS growth expected, Royal Caribbean is expected to outpace nicely, and as well as revenue, right? And I will say Royal Caribbean generally has the more epic cruises. And when I say that, I mean really about the cruise ships themselves. Like Royal Caribbean has some crazy ones. Some like insane cruise ships. So that kind of is a good thing for their brand overall. But these companies do have a lot of room to kind of raise those net margins. But I like these companies actually as long-term investments. I think a lot of people are going to go on a lot of cruises this next 10, 20 years. Baby boomers are going to be cruising like it's nobody's business. So I do like those companies for the long term. They do have big debt loads, so you have to deal with that. And then obviously you have to deal with a little slower demand, maybe in recessions. But at the end of the day, with all these baby boomers, I'm telling you, man, these baby boomers are going to be cruising like it. You only got one life, right? You only got so much time here. So I'm just saying, like these baby boomers that have made good money in their life and have a lot of money behind them, they're going to be cruising like insane this next 10, 20 years.